Thursday's inflation report could challenge the market outlook for big Fed rate cuts. The Consumer Price Index is projected to have risen 0.2% in the final month of 2023, or 3.2% for the full year. There is a wide gap between what the Fed has indicated in terms of rate cuts and what the market is expecting. The Fed's central mission now is calibrating policy in a way that it doesn't ease too much and allow inflation to return or hold policy too tight so that it causes a long-anticipated recession. Fed's Williams says rates are high enough to cool inflation to goal. Bloomberg, Federal Reserve Bank of New York President John Williams said monetary policy is now tight enough to guide inflation back to the Fed's target, but suggested policymakers need more evidence of cooling inflation before cutting interest rates. My base case is that the current restrictive stance of monetary policy will continue to restore balance and bring inflation back to our 2% longer-run goal, Williams said Wednesday in White Plains, New York. International trade in goods statistics about international trade in goods, on a balance of payments and international trade basis. Key statistics: the seasonally adjusted balance on goods increased $3,777 million in November. Goods credits, exports, rose $789 million, 1.7%, driven by coal, coke and briquettes. Goods debits, imports, fell $2,988 million, 7.9%, driven by non-industrial transport equipment. OECD urges Japan's central bank to gradually raise interest rates. Tokyo, Jan 11, Reuters, the Bank of Japan should gradually raise short-term interest rates and make its bond yield control policy more flexible if inflation stays around its 2% target and is accompanied by sustained wage growth, the OECD said on Thursday. While the BOJ made tweaks to yield curve control, YCC, last year to loosen its tight grip on long-term interest rates, markets could challenge the policy again if inflation remains above its 2% target and global yields go up, it said. ECB Schnabel says euro area faces weak outlook in near term. Bloomberg, talk of lowering European Central Bank borrowing costs is premature at this stage, Executive Board member Isabel Schnabel said, prompting investors to bet on less monetary easing this year. It is too early to discuss rate cuts, she said in a Q&A session on X. We will keep our key policy rates at restrictive levels until we are confident that inflation sustainably returns to our 2% target. This requires additional data confirming the disinflationary process. Thank you.